Good afternoon, and welcome to today's GetSwift webcast as part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, Bain Hunter, CEO of GetSwift. Sir, the floor is yours.
Thank you very much. Good afternoon, good morning, everyone. Thank you for attending our presentation. Today we will talk a little bit about our company, and should time be permitting, at the end of the presentation we'll open it up for a few questions. As we move on to slide 2, I would encourage everybody obviously to read in detail the forward-looking statements, but with that, let's go directly in terms of talking about what GetSwift is. So simply put, GetSwift, the way we see GetSwift, we're positioning ourselves to be the glue that will hold together both large and small businesses, especially in the last mile sector. Basically, that means that regardless of the business size, complexity, vertical that they're operating, geography, we have a solution for them. What's important to stress is that we are a SaaS, software and services-based company. We do not own trucks, mopeds. We don't have our own driver workforce and everything else. We effectively, as I said, provide a solution so that organizations and companies of all sizes can effectively have an end-to-end solution in the last mile sector. It's a scalable enterprise software platform that provides unparalleled benefits to organizations and entities that are now facing a critical demand in terms of delivery component. Since 2019, we've made 3 acquisitions that have accelerated our expansion. What's important to understand is that our acquisitions were made specifically based upon the feedback that we were seeing from our existing customers and from the marketplace itself. We've experienced rapid revenue growth from 2016 to 2020 with a CAGR of more than 191%. And what's equally important to stress is the philosophy that we have from day one. And the philosophy that we have from day one is, unlike some of our competitors that are focused on what we would call ultra niches, be that food, be as it may food or something else, we wanted to effectively come out and demonstrate that we have the capability to compete across all industries, and quite frankly, even geographies that are complex or difficult to get into. Today, GetSwift is utilizing across 75 industries or verticals in more than 70 countries. Currently, we have been listed on NEO in Canada, and we have begun trading as of January 2021. We also expect the OTCQB listing to be in place shortly, hopefully within weeks. So, where do we sit? How do we actually position ourselves? Well, we are, again, at that cross section between the delivery management / workforce component, meaning the competitors or the players in that particular sector being such as Deputy, DoorDash, Instacart, OnFleet, Postmates, for example. And the flip side, on the other side, is the e-commerce retail solution aspect of it, be it in Lightspeed, Stripe, Zebra, Shopify, etc. It is a highly competitive environment, but we do believe that we offer something very much that's unique in this sector. I won't get into too much in terms of the opportunity that's there and what the sector has shown, but suffice to say that one of our theories that we've been exposing for the last several years, pre-pandemic, was that this particular sector, this particular need, was going to fundamentally shift, and if nothing else, it will be a given. What COVID has done, in our opinion, it has accelerated that, and more importantly, institutionalized a certain behavioral pattern. And that behavioral pattern that we've seen, obviously, is on the consumer side, but equally important on the business side, it has eliminated a level of, let's call it, lethargic inertia that organizations had in place in terms of change in the last mile sector and the need for the change in the last mile sector. So what is the market opportunity? Well, the market opportunity is huge. But if you look at slide 6, what this slide actually demonstrates is something that is key to our thesis. We see that obviously the U.S. delivery spend is more than $860 billion. The marketplace spend is $600, but yet that niche marketplace spend, in other words, that niche aspect where some of the competition tends to operate in, is only between $2 to $4 billion. Our projections, our placement, our analysis and our vision actually supports a much broader base as opposed to a niche market base. We've all seen, quite frankly, the changes in consumer behavior in 2020 and going forward. A significant percentage of these consumers, when they have been repolled, from what we've been able to see, have indicated that their patterns of behavior have now, again, fundamentally changed. We expect the next 5 years to be fundamentally, let's call it a fundamental shift in terms of how consumers behave, how much they spend, especially when faced with the last mile component and ease of service, and last but not least, how much organizations or businesses are going to have to spend to be able to compete. So what does GetSwift do, and why do we feel that we have a leg up on many of our competitors? Well, we address all challenges in one offering. We can offer something to your mom and pop store down on the corner, and we can offer something that's completely comprehensive and integrates with legacy systems to large multinationals. I won't get into too many details, but if you look at this, what we call this wheel that we have, everything from dispatching, routing, tracking, invoicing, driver safety, and which is actually very important in now and during the pandemic and post-pandemic timeframes, as well as data exchanges and real-time analytics, we offer in some form or format. What's equally important, and perhaps we haven't stressed this as much, but I would like to stress it now, is this. We also offer, let's call it a shield, to organizations and companies that are facing an interesting choice. And the choice that they face is, do they go at it alone, trying to solve this issue, or, as we kind of jokingly say, will they worship at the altar of the behemoths being whether they be Amazon, Walmart, or what have you. We, being the shield, offer these, let's call it potential customers and businesses, the opportunity to do both. Why? Because 1, we white label everything. 2, we do not sell the data. 3, we process everything via our platform, so that if they choose to work with any organization and continue to utilize GetSwift, that data, their customers, their brand equity is protected. So the integrated tools. Slide 8 just gives you an example of what a deployment looks like at, let's call it a larger customer of GetSwift. There's a tool for every business, regardless of size, complexity, location, or vertical, whether it be an e-commerce front end, connectivity, scheduling, mobile components. We, again, have that capability, have the products, and have the patentable technology to go along with it. Speaking of patentable technology, we have 3 provisional patents that have been granted to us, and we expect a few more to come down the pipeline. So, briefly touching on this, whether you're an enterprise, a medium-sized business, or a small business, we have the capability to integrate, we have the capability to help you grow into that, and we have a solution that makes commercial sense, that makes operational sense for you, and equally importantly, it's scalable, it's safe, and it's stable. What does that all lead to? Well, this is another very important, let's call it vision and perspective, and a moment where we arrived at. GetSwift becomes the single source of truth. Effectively means that once we are integrated into an ecosystem, everything within that ecosystem at some point in time will touch us. So all delivery management, dispatching, routing, tracking, driver management, data analytics, more is designed to be deployed, integrated, managed in a secure and scalable cloud-based platform. But also by becoming what we call a single source of truth, we do something else. We effectively are not seen as a vendor, and we don't see ourselves as a software vendor. We see ourselves as an enablement partner, because when we go to these organizations, whether it be small or big or medium-sized, we don't try to sell a solution. We try to understand the problem. We try to understand what objectives somebody's trying to reach, what tools do they have available, and, of course, the time available for them to achieve that. We effectively become a cornerstone, a pillar, if you want to call it, a long-term pillar of their ongoing solution. So how do we monetize? Well, here's another additional benefit that GetSwift has. At a very simple core aspect, we monetize per transaction, meaning per delivery, a customer may pay, cents per delivery. It'll depend, obviously, on where they're located. Somebody, for example, in an emerging market is going to pay less than, obviously, somebody in, let's say, in the UK or in the US. It'll depend on the volume that they do. It'll depend on the vertical. We also, for a number of our customers, and it's an area we're rapidly expanding, charge a percentage of the e-commerce basket size, meaning if we go to them and tell them, you can build a model where we'll help you do everything that you need from a technical perspective and services perspective for the last mile component for 2%. Does that make sense to you? Now, we find that that is a very attractive commercial proposition. But equally important is this. In one particular sector that we've analyzed and we got into, which is the farm-to-table sector, what we call the pre-GetSwift and post-GetSwift model, we've seen that the average basket size pre-GetSwift was in their $20 range. Post-GetSwift was in the $80 range. So it becomes a no-brainer for a lot of these businesses. There's also obviously fees that we can charge from a recurring maintenance and advisory per project, per program, percentage of gross payment per transaction, which is, in other words, we have a billable model for processing payments built in. Some customers will charge some customers we can charge per customer. Some are charged on a monthly subscription basis. For example, for the workforce management, it's charged per user or per driver. So again, there are multiple instances of monetizing our product. We don't have a single point of failure. And if anything, I would say that during this period of time, we have proven the value and we've proven the model, that the model is scalable and generates significant revenues. My apologies, I just went one slide too far. Now, in terms of customer acquisition, this is equally important in terms of demonstrating the value that the company has. I mentioned the food sector. Well, food represents under a third of our total customer acquisition. Food, in our opinion, for food delivery, has been hyper-competitive. It's the easiest one to get into, but we personally believe it's also the one that's going to start showing diminishing returns in terms of revenue and profitability. For us, we have courier, messenger, services, e-commerce, trucking, flowers, grocery, and many, many other sectors. In terms of acquisition by region, similarly in 2020, like we had indicated, our focus was in North America. North America represents 55% of our growth, but having said that again, we've demonstrated that our solution, unlike some of our competitors, is truly universal. We're in Africa, Asia Pac, Europe, Middle East, South Central America. We truly cover the globe. I won't spend too much time in terms of new revenue opportunities, but what I will say is this. The company is constantly looking how to come up with new product features, how to look and expand into different sectors, whether it be construction, infrastructure, resource distribution and management, etc. It is a two-pronged strategy. It's a strategy pronged on one, understanding the evolution of this particular sector and having a robust product strategy that you can monetize. Again, I will emphasize, monetize. And last but not least, looking at the sectors that are ripe for transformation. Some are a bit more, let's call it bleeding edge. Others are more traditional and take time. We just have to be very, let's call it, cautious in terms of which sectors to pick in order to generate the maximum value. So what will our growth catalyst be? One, it's the acceleration of the top line. We have definitely looked and are seeing cyclical modalities in terms of our revenue, shall we say, growth. Without giving any forward projections, because that's not what we do and it's not our intention, our expectation is, quite frankly, that 2021 is, as a year, is going to be a better year for us than 2020 was. We plan to add additional business lines. I mentioned the growth in terms of the patent strategy. We will also look to add, let's call it partners. But we will be very, very judicious in developing these partner relationships. The reason being is we firmly believe that the company is positioned at an important crossroads. Our strategy, our products, our planning have all brought us to this point. It's very important for us to be able to use our resources and capital smartly. And last but not least, I think it's fair to say that we're continuing to optimize operations. It's no, let's call it secret, that a huge chunk of our expenditures have been in terms of extracting ourselves out of Australia. But we expect, again, as a result of that, for our expenditures to go significantly down. We will be emphasizing, obviously, more what we would call low-effort client captures, the ones that have shown the capability to start delivering revenues on a consistent basis. And the other thing that we intend to do is obviously terminate what we would call high-effort, low monetization accounts. Most startups will grab, and we were just as guilty as any other startup, will grab any account they can in the early days. But as the company tends to mature, it has let's call it a more balanced view of the marketplace and has the capability to be a little bit more selective. We intend to be a little bit more selective in terms of the businesses and partnerships that we decide to get into. The company has a very robust leadership team. I think, if anything, I would say it's this. It's resilient, it's adaptable, and it's dedicated. We have gone through challenging times, but even through challenging times, we have prevailed and demonstrated significant results. I won't spend too much time on this, but I, of course, invite you to go to our website, GetSwift.co, that's .co and not .com, and you can read the biographies in a bit more detail. So key takeaways. I think it's important to realize that when we first listed on the ASX back in the old days in Australia, the company was really under a dozen people doing under $500,000 a year, I believe, in terms of top-line revenue. Despite the challenges and, again, the resiliency, we have consistently grown to 1.4 mil in 2018, 5 mil in 19, and a little over 26 mil in 2020. We expect growth to continue into 2021. My focus on the company's focus for the next, let's call it 2 to 3 years, let's call it 2 years, is very much a focus on revenue growth and optimization, but it's going to be what I would call a careful balance. We believe we can continue this revenue growth, but it's going to take a chunk of, let's call it, investment and capitalization associated in it. Flip side being is if there's a drive towards profitability, the growth, let's call it curve, our expectation is that it will tend to flatten. We provide attractive unit economics. We believe that our products, our features, our teams are all resilient and offer something that's unique. And humbly speaking, I also believe that for a myriad of reasons, we provide, let's call it a value right now in terms of how the market is currently capitalizing us and, shall we say, their view on the market capitalization of it. So with that, I am going to see if there are any queued questions at this point. I wanted to ensure that we have a few minutes. So with that, let's see if there are any questions at this point. The question is, who are your closest competitors and what are the company's value catalysts moving forward? So I believe I somewhat addressed that, but let me be a little bit more specific. We have what we call niche competitors. Niche competitors meaning competitors that operate in a specific sector, whether it be food delivery, whether it be direct freight, whether it be, let's call it urban delivery, whether it be regional delivery. Then the other level of competition, and I wouldn't call it competition, and here's the reason why I wouldn't call it competition. Anybody that tells you that Amazon and Walmart are competitors is aiming for an interesting, let's call it dynamic. I wouldn't call them competitors. I would call them complementary. So we see the likes of Amazon, Uber, DoorDash as complementary to what we do because there is a very much of a need in the marketplace for a solution that offers the Amazon-like capabilities, but with the safety of GetSwift and also the flexibility and freedom to do, whatever a brand or a company wishes to do while preserving their, again, data, marketplace, as well as their, let's call it, future flexibility. Let's see if there are any other questions. Doesn't seem to be that there are any other questions at this time. I'm going to give it another minute or two. Of course, I would invite you to carefully read our materials. I would also invite you to reach out to the link that's been provided both on the deck that will be made available as well as our website for investor relations. We are happy to answer any questions that we can. And we just wish to, again, thank you for your time. Thank you for your consideration. We invite you to hopefully become investors in GetSwift. And I hope that you're as excited as we are, because this company, this team is unique, it is tough, it is eager, and it has proven its mettle through fire. And quite frankly, as an old Timbuktu song says, the future's so bright we should all wear shades.
Thank you, ladies and gentlemen. This does conclude today's webcast. Thank you for your participation and have a wonderful day.